All right, we're going to be talking about Bitcoin and how I trade it. I have not been looking at Bitcoin for a while, mainly because the way that it's been trading has been interesting, to say the least. It kind of changes its character sometimes, which I don't really like, so I kind of step away from it. But yeah, Bitcoin is a great asset to trade. I think that it's great, but there's a couple of different approaches that I make or that I trade for Bitcoin. Number one is going to be just SMT at extremes. So whenever we're trading SMT, I'll look for a high. I'll notice how this made a lower high. Actually, where's my Bitcoin SMT chart? There it goes. So crypto SMT chart. So essentially, what I would look for is a high met by a different high on a different asset. So if the main two are from Ethereum and Bitcoin, sometimes I have Solana. I'll kind of give its opinion because look at this. I mean, what the hell is even that? But liquidity run, talk about it, right? But essentially, what I would look for, I'll just look for SMT at important areas. So New Day, I'm sorry, you can't really use New Week opening gaps. So all you would really use is I don't know why I don't have these here. So you would have previous daily high, previous daily low. Do I have it here? No. Previous daily high, previous daily low. I'll use a previous weekly high, previous weekly low. And I would have both VWAPs. I had the freaking craziest dream last night, dude. It was freaking wild. VWAP. Oh, I don't need to have SMT on there. Okay, good. So both the VWAPs, daily and monthly, daily, weekly, monthly opening lines. And then we have, I made this indicator myself using AI. That was pretty cool. Volumetric heat map. This is so stupid. Volumetric heat map. This is so crappy. But yeah, I don't use any of it. But people actually use this for whatever reason. People see it as like levels, like reversal zones or whatever. I think it's dumb. But I like using just a chart by itself. Whatever the chart tells me, that's all I need to know. But you know, it makes an important SMT somewhere, some level of importance. And whenever it does that, I pay attention. So stuff like this, that makes but they both made higher highs. So higher highs is fine. From there to there, I would look for something like this, right? See, that's it. Oh, that's it right there. So higher high, lower high. I started to look for a short up in here because it took out an extreme. So it was doing this little thing, pushed up like crazy, made the SMT, then starts to reverse. You probably hold it all the way until VWAP. So you probably hold it all the way until over here. And like a 1 to 8 or whatever. But that's essentially the strategy. Not a whole lot that goes into it at all. But it has to be at an extreme. Remember, it has to be at an extreme. So the VWAP is an extreme. So from here to there, lower high. From here to there, higher high. SMT, again, on Ethereum. Stop loss above the swing. You can ask for another extreme. But, there's not a whole lot of area that you can put this TP at. So I guess you can put it down this low. You probably have it probably down to like there or something. Mainly because it's a relatively acceptable low and the opposite or opposing liquidity area um, on Asia session. So opposing liquidity area would be somewhere near the lows in here, and market, will sweat into it. You can even do like the fair value gaps, so something like that. I don't know if it's perfect or not, doesn't matter. So you could do that 50% of the fair value gap. We do the whole thing. So did the whole thing of the fair value gap, filled it in, and then you got out for the trade, took everything before it started to retrace, and you didn't have to wait anymore. But that's if you wanted to stay in the fair value gap. But if you didn't, you could always ask for the very low because crypto is very liquidity hungry, and it will just about always go to the very extreme. So that's a very important thing to remember. So over here, you made a lower high, just about the same thing, just about relative equal highs, and this one made a lower high. So you probably look for a short in this one, but this fair value gap ate you up a little bit. So see how that happened. But yeah, I mean, higher high right here, higher high right there. You have a lower high right there. So this is not an extreme. This is an example of not an extreme. Now, the reason why this didn't work out was because there was still liquidity up in here, and there's no reason as to why the market should reverse just because it happened right here. All right, so same thing like over here. There's a previous daily low, like, oh, it should work out, right? It's not extreme. It doesn't look extreme to me. Although this is a higher low, and that should be, the reversal. First of all, we're in a downtrend. Why are you looking for upwards SMT? And the second reason is this is not an extreme. Although you have the previous weekly low or high, whatever this is, and you also have, it's probably previous weekly low, isn't it? Yeah. Previous weekly low is here, and then you have the SMT. This is not an extreme, right? However, you have those two levels here. The reason why I say it's not an extreme is because you're looking for a reason or an area that would be like, yeah, that's an area that it will reverse at. Now, this is not an area that I know they would reverse that because it hasn't even taken out liquidity yet on the opposing side. Plus, we've been bearish like this entire time, so there's no reason why we should be looking for uptrends. That's the difference, right? Now, if you don't get in an SMT entry in here, then don't worry about it. This is not your trade. So you look for another opportunity. Somewhere you can even look for, something like this, from there to there, and from there to there. Remember, this is just one strategy that I have of two that I trade on crypto. So, it starts to, remember the candle manipulation theory? So it made the low of the candle, started to push back up. Once it did that, you look for the entry and you put your stop loss. I hate these little toolbars. I hate it. Find a way to get rid of it. But from there, you can look a way to fill in this gap in here. So from this high to this low, you can see how this gap got filled in, pretty quickly. Didn't take long at all for it to get filled in. You can look for the entire fill because the crypto would very rarely leave a gap unfilled 100%. That's pretty rare, right? So you can ask for 80% or 75% or 50% or whatever. Even at the previous daily high or low right there, you can ask for it just right there, and you go, whipped a couple times before dropping down, then pushing up again. So that could be all you wanted to take right there, or you can do 75%. I do 75% or 50% or 100% of it, because remember, crypto often pays you 100% of the move, mainly because, again, liquidity hungry. So I can show you why I think that way, and why I came to that, and where market's going to come in here at some point, I'd like to say. But same thing, like over and over again, took out the liquidity up in here, feeding into fair value gaps. So the one on the Asian session will be right here. Lower high, higher high. Crypto would short from here. From there, stop loss, entry would be there, and your take profit probably would be down here or something like that. And that's it. I mean, it's very simple. There's not a whole lot that goes into it, I like to argue. So see how this one pushed up, higher low, lower low. Maybe it didn't pay you out. Maybe you lost an opportunity there. Maybe you lost money or whatever. But I would never trade SMTs that are that wide. I usually trade on, remember, they're pretty close together. There's not ever an opportunity that I would have like 20 candles separation from one low to the next. I would never really look for opportunities that are that far apart from each other. Now, all we're really trading here are reversals. Now, a different approach is continuations. So you see how the market, made its thing, started to go up higher. There's no SMT in here, but it gave you SMT from there to there, right? So what this means is that this is a continuation SMT, letting you know that the market is going to want to be going higher. Now, my entry would be somewhere in there. Stop loss would be there. I would have a lot more conservative TP than I would with more aggressive strategies, more like the reversals, a lot more aggressive. Like these are a lot more aggressive. These are a lot more conservative. So you can even do like something like that, like into this upper fair value gap premium. Now remember, the market filled 100% of that gap, and even filled in when that was in here before it started to reverse. So filled in even the highest fair value gap that was in there with a big old wick, because crypto is very liquidity hungry. So from that, I mean, that's really pretty much it for that part of the SMT. But whenever the market, fell down to the VWAP, there's not a whole lot that's going on around here. These are not extremes. These are not extremes either. This is an extreme, but there's no SMT there, so it is what it is. So a lot of choppiness for whatever reason. I don't know what's happening, But yeah, that's pretty much it. I mean, that's a bunch of winning trades back to back. But how I used to trade this, I didn't use SMT at all on this one. So how I would do it over here is you can see something like this, right? This is a good opportunity here. So um, had some high, SMT at the highs. Notice that, and so we were looking down for lowers, for lower prices, and then we had this right here, this fair value gap, right? We were just chopping around the fair value gap the entire time. Notice what Bitcoin did. So Bitcoin dropped down, right? And what was it? I was looking at this earlier. SMT. That's pretty close anyway. Let's just outline these just so we have it in our mind. Yeah, so my short would be up here anyway, but it had the displacement leg, fair value gap. It was consolidating in it a bunch and made a higher low. I guess this is S&T right there, higher and lower, you know. So you can have one like that show up, just like that, and then can't remember which one I was. I don't know if it was on this pair or not. But lower high, relative equal high. Anyway, this is relative equal high, and this is a much lower high. So I would short this one right there. Or you trade this one as well. It doesn't matter because it had this one. So this one was a lower high, had the displacement. The reason why I would suggest trading this one is because it's the one that had the displacement. So displacement lower, retrace back into a fair value gap in here. And from there to there, another fair value gap. So it respected the 50% or CE, consequent encouragement of the fair value gap. Also had this one fair value gap in there. So market, you know, dropped down, fed into this. Again, another fair value, just hell fair value gaps on, you know, crypto. But, you know, had this fair value gap, push into a created SMT within it. This is a great, fantastic shorting opportunity. So short would be probably on this red candle in there. Stop loss would be just push above that. And take profit would be in a very far direction lower. But notice how Bitcoin was just chopping around in comparison. You know, sometimes they do that. So just be weary of that. So yeah, in this example, we'll probably go down to here or whatever, because asking for that, you're asking for a whole lot there, you know, especially since we're in an uptrend. So ask for something, you know, conservative, and ask for like a low down to here, or you can even do the fair value gap. You can even look for like the high of the fair value gap in there, be a little more conservative, because we're in a, again, you're moving against the trend here. Although you have a great setup with displacement twice, you can even shorten here. You want to be careful because, again, we are in a uptrend and you're shorting, right? So keep that in mind. But how I would usually trade this kind of setup, you know, before the market started to consolidate all the time on Bitcoin. That's ever since the war started, it's been consolidating like crazy. So and here, you know, what you would look for is a bunch of consolidation, you know, a run towards liquidity, which didn't do it that well over here. It ran it over here, so ran liquidity, you know, some displacement down lower, and then you have the fair value gap fill, and that'd be your entry at the midpoint. And you look for the fair value gap fill down in here, so that'd be a 1 to 5, whatever. That's just one example. We have a lot more examples over here. April 1st is one of the biggest days I ever had. I turned 100 grand to 145 grand, so it was a pretty good day. But same thing, remember, consolidation, ran liquidity, displacement, small displacement. It wasn't displaced enough, like there's not enough candles, not enough movement down lower in order for me to actually trade it. So I was keeping an eyeball on it. So you see displacement, consolidation, displacement, retrace back up into the higher fair value gap. So what I was looking for is this displacement right there. Big displacement, 5, 6, 7 candles in a row, whatever. Drops down, creates fair value gaps. That's where I would look to get in short. So lower fair value gap, upper fair value gap. The way that I would trade this, I would trade the midpoint of the highest premium fair value gap. So what I would do is from here to there, that's your premium. And what I would do is I would outline fair value gaps. Now you could outline this tiny ass little freaking fair value gap, but you know, you're probably not going to get much from this fair value gap because it's super tiny. There's probably not a whole lot of liquidity sitting in there. But where it is the sitting is right in here. 50% of this big boy fair value gap. And on top of that, it's within the premium. So you see the low and the high, midline, premium. This is a premium fair value gap. And midpoint of the premium fair value gap, that's your entry as your short. I mean, it looks pretty good, right? So my target, my TP was like 50% of this fair value gap, something like that, or filled in this fair value gap. So I did it pretty quick. I actually have the screenshots of the pictures of that, but yeah, so that's it for that one. And it's the same thing over and over again. So you see the market run liquidity, push straight up, super high, fair value gap, fed into it, and then I would just look for the same high over there, 1 to 4.7. So same thing here, ran the liquidity, made a little bit, not the best displacement, but it made some level of, move down lower. And well, it is displacement. It just has a lot of wicks, which is kind of ugly displacement, but give it a shot. That was the low stop loss. That was at the body of the candles was my stop loss. Entry was at midpoint, I meant to say. And then, eventually made its way down in there for a 1.3.3, 1 to 3.3. This one here was more of a retracement in a bigger move. So market to liquidity out, and then made a displacement in one big candle, made the fair value gap 50% midpoint, and it would go to more towards my take profit, which was a higher end, the lower end of this higher end fair value gap. So out of all the fair value gaps in here, I just wanted to barely tap into it, and that's what got me in here. So filled it in, dropped down, filled it in again, and then that was it. And that gave me the 2,000, almost 2,000 points, or $2,000, whatever. Yeah, 2,000 points. But same thing. It was the market starting to come back down lower. Didn't fill into the fair value gap for whatever, but we had the displacement, so it was looking good. Fair value gap was in there, fed into it. Started to push up again, another test, and then big push move up higher. Bring that over a little bit. And that's it. I know there was more opportunities in that. Like this one was really good. I remember this one. So bunch of consolidation, bunch of highs. Market ran the highs, created the displacement, but there was no premium fair value gap. So you look from high to low, there's no fair value gap above, so I didn't trade it. So that was that. Push up higher, made the displacement down lower, and I don't know why did I enter here again? I can't remember. I think it was because I didn't see any fair value gaps within here. I just wanted to get into it, which is a terrible philosophy. Don't just get into it, even though it doesn't have a fair value gap or whatever. Don't ever do that. But once it started to push over, that's whenever I got in right there. It was like, okay, it's starting to push down lower, and then it almost took me out before it started to go in my direction. So don't ever do that. Do not ever do that. So I mean, another example, right? Market pushed up, liquidity dropped down with displacement. Didn't want to fill in the upper fair value gap, which was my short entry, and then had a bunch of consolidation. And I saw this big displacement coming up, outlined the highest fair value gap in the premium. It's a decent fair value gap. Filled it in, and I looked for a conservative TP just below the swing lower, just within this fair value gap in there with my full TP for around $220 to $28 on Bitcoin. But consolidation down here, displacing up, displaced fair value gaps were getting filled in. The 50% of the lowest fair value gap was it, and got my $1,120 on Bitcoin. That's per share, by the way. But this one, consolidation, big, deep, big candles up, and you have this fair value gap right there, filled it in a little bit. Never filled in 50%. Did a little bit right there, but even here you can see the fair value or the SMT in here. So you can see right there and right there. Right there, that's it. And then I'd look for an entry right there, long. And it'd be double SMT though. So remember, double SMT reacts 3 times, 4 or 5 times as hard as regular SMT. So that right there. And then as soon as it happens, push up. It had a little bit of retracement, a little deep retracement again, and then picked up some momentum and started to push up higher. But this SMT, this is the lowest portion of this entire move. From this low to this high, the low was constructed or was made by SMT. So double low. I wasn't created by SMT, but that was the lowest of this whole move, was where the double SMT was located. So double SMT was here. You can enter long right there. So it would take you out of your position on the first one. So what I would do is I would see, the SMT is here, is good. So what I would do is I would look for an entry from in here, roughly. My stop loss would be in there. TP would be wherever. And took me out. We're going back down lower. But over here, I would notice how it would do the same thing, So I'm like, double SMT is forming. Perfect. So I would do is I would look for another opportunity just right there, maybe in the green candle. Stop loss would be down there. And I would look for a much larger take profit because it's double SMT. So it would be a whole lot better. So what I got was like 1 in 11 out of or whatever. But that's basically it. I mean, I say basically, this is complex, but there's yeah, it's pretty much all of it that goes into it. But market is the same thing over and over again. Displacement down lower. This is not displacement. I'm sorry. I move down lower, pushes up, I guess, to do whatever it wants to do, and then finds some level of displacement somewhere, fills in a fair value gap right there, midpoint. I mean, midpoint is filled in. That's your entry short, and then it just pays you. Goes down for a while. So how long a while? Almost $10,000. It's 8,000 from the midpoint, was roughly there, all the way down to here is 7,000 points. So it's pretty good. Find an area to get out in here somewhere, and it'll pay you. Remember we had a fair value gap in here, so from that to there. Now the reason why I'm doing this one is because that's the part that was left unfilled. So this portion of the fair value gap was unfilled from this low to this high. Now remember, it goes up to here, but that portion was not filled in below that. So you notice how the market filled it in. Oh, interesting, right? Now the last thing I want to leave you with is how the market actually works in crypto. So what you'll see is whenever you see big gaps like this, you would see big gaps, chopping, big gaps. The crypto market will just 9 times out of 10, 9.9 times out of 10, it will just about always fill in the gaps. Always fill in the gaps. So drop down lower, consolidate, still heavy, drop down lower, and guess what? Filled it right in. So made a little gap in here, made a little gap in these, filled it right in, and it filled this right in, and it filled in this for value gaps. And market was just consolidating, right? Big gaps, consolidation, slow move. Even these gaps filled it in, and it filled in the rest of this gap almost. And then market pushed up, a little bit of a gap in here, consolidation, filled in the gap. So it filled in a little bit more. It didn't want to go any lower for some reason, but it filled in the gap a little bit, and then it pushed straight up. Made a little gaps in here, retraced, filled in the gap a little bit, pushed it up, made a little gap, and then once it made the gap down here as well, pushed down into the gap, pushed down into these gaps, and then made the other opportunity push up to fill in the gaps down here. All right, so then it filled in all the gaps, filled in all of them, all of it. There's not a one gap that was missed out, even all the way down to like the very bottom gap down there. And rinse and repeat, right? So consolidation, push up, fill in the gap. The other one down there left unfilled, but pushed up, filled in the gaps, pushed up, filled in the gaps, pushed up, filled in the gaps just right there. Pushed up, almost filled in the gap a little bit, got a little bit in there, and then pushed up, big gap, filled it in immediately. Pushed up, gap, filled it in all the way, filled it in again. Pushed up again, big gaps, filled it in. Market, there was hardly any gaps down in here, but pushed down again, all these gaps in there, filled it in up there. Big gaps, filled it in, took liquidity, big gaps, pointed up, filled in whatever was up here, and then started consolidating some more. Big gaps down here, big gaps, and then filled in all the other gaps in here, and then created more gaps, and then filled it in immediately. So what you'll notice is on other assets, sometimes the gaps just they stay open, right? So sometimes you'll see gaps on other assets that will stay open for whatever reason. So stuff like this won't fly on crypto. So drop down, barely filled it in. Drop down, barely filled it in. Drop down, didn't fill up any of it. On crypto, tell you what, man, it fills it in immediately. So it drops down, a couple hours later, it's filling it in. So the personality is a bit more quirkier in that regard, I guess. Market dropping down, which is why I guess the market was going to come back up into here and fill that in, or at least fill this in, because there's gaps in there and the market wants to fill it in. So that's pretty much it. I want to see the market push into these big old freaking $1,000 gaps in there. And notice gaps, consolidation, gaps, filled in the gaps, even filled in these ones, filled in the gap a little bit down here, and then dropped down, made more gaps, and now we filled in the gaps over here. So notice how the gap stopped here. So even the fair value gap, the smaller one from here to there, you can go here and extend to the right. You can see fill in the gap. I mean, is it like what a coincidence that it fills in the gap, right? So again, another gap, just about fills it at 50%, drops down, does this thing, But that's why I love trading crypto, like the gap strategies, either the gap. I don't call it the gap, but they'll call it BTC swing strategy. But there's the market has gaps, and Bitcoin loves to fill it in. So I like to participate in those. But that's pretty much it. I mean, we've covered gold, we've covered forex, we've covered crypto, we've done multiple gold strategies, multiple Nasdaq strategies. So multiple crypto strategies. So there's a lot that goes into this approach, and we can go into gold for the next video.